So in this video, we're going to talk about DocuSign. They reported their earnings. Q4 sales look especially strong. And DocuSign hinted that stronger sales growth to come. Now, this is despite profit margins that will potentially start shrinking. Nevertheless, the stock was higher on Friday, 14%, 15%, $11 in total. Now, this is the monthly chart, and as you can see, DocuSign was one of those pandemic darlings until it wasn't. And this move lower was the result of the economy opening back up. Price has since bottomed, hitting that monthly buy level that was formed back in December of 2028. You had this drop in price. Two basing candles rally up. Price tried to come back but could not until the move down that occurred from 2021 to 2022. Price bounced, came into resistance, bounced again. So this was a great trading range before finally breaking through, and that was your signal and the all clearance to move higher. Now, before we continue with analysis, let's actually get into the actual results. So heading into the fiscal fourth quarter 2025, analysts forecast DocuSign would earn 85 cents per share on 762 million in sales. In fact, earnings were 86 cents per share and 776 million. Now, sales climbed 9% year over year and billing rose 11%, foreshadowing even faster sales growth ahead. If there was bad news in the quarter, probably that DocuSign 86 cents per in profit was only a non-GAAP number, and the real earnings, as calculated according to GAAP, were only 39 cents per share. Then again, last year in Q4, DocuSign earned only 13 cents GAAP. So just even 39 cents is a 3x increase in profits. All right, let's talk about guidance. DocuSign is forecasting 3.1 billion in revenue for the current fiscal year 2026, which works out to revenue growth of about 5%. Management gave no guidance for GAAP profit, but if earnings grows in line with sales, this implies stock is overvalued at a PEG ratio over 3. PEG ratio 1, the valuation is fairly valued. All right. Let's drill down to the weekly chart. A couple things my eyes gravitate to. You have two different weekly sell levels, buy levels. You have one, and you have another one just below. And you are now getting a bounce off the first. Price pierced, but didn't close below. So this would have been a good opportunity to get long. Weekly buyers at $80. And you have another one below that. We're going to call that $71. All right, let's drill down to the daily. Eyes are gravitating to this level here as a price target, roughly $92. So in the daily chart, price did close below. But on earnings, we had that gap higher. Would have been lovely if price would have gapped lower. Great buying opportunity then to have gotten long. This is the 200-day moving average going through the lower zone at $71. Again, two targets. First target is going to be $92, and the second target is going to be $98. Thanks for watching. Subscribe. Please like the video.